Hey, Amalodians, I welcome you to my YouTube channel and I also welcome you guys to another profitable and prosperous trading week. In today's video, I'm going to review and explain in details all my A plus setups and all my trade ideas that I have for the week, all the pairs that I want to trade for the week, and all the conditions around my trade idea so that we can all learn together and make money together this week. The first pair that I want to analyze for you guys this week is Euro CAD, that is Euro against Canadian dollar. As you all know, we are top down analysts. We are technical top down analysts. We don't we don't underrate or neglect or overlook what the market is saying on the higher time frame. That's why we always start our analysis from the top down time frame, higher time frame, so that we can get a bigger picture of what the market is doing. On Euro USD daily time frame, as you all know, that we have to establish the structure of the market to know who is dominating the market, whether the buyers or the sellers are the one dominating the market, which is very, very important. Now, on the daily time frame of Euro card, you can see the structure of the market was bullish before, right? Whereby price was forming high, higher low, higher high, higher low, then higher high. Remember, the rule says that the recent higher low must not be taken out, right? In a situation whereby price trade below this recent higher low is a confirmation that the bullish sentiment is no longer valid, that the buyers are not dominating the market again, that the sellers are already in the market, that the sellers are the one in charge of the market as a result of the invalidation of this bullish structure. Now we're not having low, lower high, lower low for the continuation of the bearish structure sentiment. These are very, very important. You have to understand structure very well. Or in a situation whereby price is also trending down, forming low, lower high, lower low, right? Then we have another lower high, then lower low. And all of a sudden, we're expecting the market to form another lower high for the continuation of the bearish structure, but the price change the direction of the market and break this recent lower high during this bearish market sentiment. It's a signature, it's an indication that the buyers are now back in the game, that the sellers are not ruling the market as a result of the invalidation of this bearish structure. And that is the same thing I want us to figure out on EuroCAD daily time frame in this video. Now, looking at the chart, you agree with me, EuroCAD was trending up for like few months ago, right? Now, whereby we're having high, higher low, higher high, equal low, then we have higher high, higher low, right? Then price formed equal high. We're expecting higher high, but price formed equal high. Now, as a result of that, what happened? The seller took charge of the market and trade below this recent higher low during this bullish market, right? Now, the rule says that the recent higher low in a bullish market must not be taken out. And looking at this price action on the daily time frame of EuroCAD, you understand that the last higher low has been taken out, right? The last higher low, the last higher low has been taken out, right? Now it's an indication that the sellers are now back in the game. What we are expecting now is price to form lower low, then wait for a pullback or retracement to form a new lower high, then lower low, lower high, lower low for the establishment of bearish market sentiment. Now, after we're able to figure out the market structure to know who is ruling the market on the higher time frame. Now, the next step is for us to mark the key level zones, the recency key level zones. Now, where are the key level zones that might serve as resistance to hold the price from buying to the upper side so that we can take sell opportunity? Now, we have a key level zones around the zone here. So let me change my rectangle to a section. Then we have key level zone around this place, right? We have key level zone. Let me increase my opacity a little bit. Now we have key level zone around here. It was serving as support before during this market condition. This was serving as market support zone, right? Now the price eventually broke the support to the downside. And in a situation whereby support is being taken out, right? That support is no longer support anymore. It has turned to broken support. And the moment the price traced back to retest that broken support, you now call it resistance, right? This place was serving as support before, right? But the moment the price broke this zone, right, and price is trying to come back to retest it, is no longer support anymore. Then you call it resistance. Then you call it resistance, right? Now, that is key level one. And there are also key level zones. Now, we have another key level zones around this place, right? Then we also have another key level zones around this place as well. Now, there are three key level zones serving as resistance on daily time frame of Euro card, which means that those three levels are going to be our point of interest, our POI for the week. There is tendency for price to come and retest this resistance level, then sell. Since we have been able to establish that the market is bearish as a result of bearish market structure features forming lower low, lower high, right? Now, the next thing, if price did not reject around this place, we're expecting it to go up to the next resistance so that we can take a sell opportunity. And if this place did not hold, we're expecting price to go up again, right, to this final resistance so that we can take sell opportunity. But one thing I can assure you guys is that one out of these three resistance zone will hold the price. And if you look at the price action very well, you can see the formation of double top here. Can you see double top here? A clear double top pattern, and price has taken out the neckline of the double top. So there is tendency for price to come and retest the neckline of this double top so that we can take sell opportunity, right? Now, and double top, mind you, double top represent bearish reversal chart pattern. So let's get on to lower time frame, which is 4-hour time frame, to see what the price action is doing. So we just have to label our point of interest where we want to take sell opportunity in the market. Now, this place is going to serve as our point of interest 2. We call it POI 2. POI 2. Why this place is going to serve as our POI 1. POI 1, right? And this place is going to serve as our POI 3. POI 3. As you all know, our entry system, how we execute our trade ideas by using reversal candlestick pattern. If we are selling the market at this resistance zone, what we have to watch out for on our lower time frame, it depends on the time frame. Sometimes we use 1 hour time frame for entry, 30 minutes for entry, 15 minutes for entry, 5 minutes for entry. But it depends on the price action reaction at our point of interest. So if price action on 4 hours time frame is not compatible with our expectation, Then we can scale down to the lower time frame, 1 hour, 30 minutes, 15 minutes, to look for another entry, right? Now, this is going to be our three zones where we are expecting market to sell this week. We want the price to retest this POI 1, then sell down, or price to retest this POI 2, sell down, price to also retest POI 3 and sell down. It depends on what the market is doing. There is tendency for price to sell and give us our confirmation at these three zones where we're expecting the market to sell on Euro CAD. And the next pair on my watch list is GPB USD, right? And looking at GPB USD, you will agree with me, GPB USD price action is clear, is clean. You don't have to stress yourself. The next thing that you have to understand is that you have to understand who is dominating the market. Is it the buyer that are dominating the market, excuse me, or the sellers that are dominating the market? All these things are very, very important, and you must not take them for granted. Now, looking at this structure, you understand that the current market sentiment right now is bearish, right? Is bearish, whereby we're having price high, low, lower high, lower low, lower high. Then we are now having lower low, right? Now, during this bearish market sentiment, what we are supposed to be looking out for is sell opportunity. Sell opportunity, right? You're supposed to be looking out for sell opportunity because sellers are the one dominating the market, right? Now, after establishing our sentiments to know that the sellers are the one dominating this market, so the next thing is to mark out our key level zones. And where are the key level zones? You can see that this space serving as resistance, where it was formerly serving as support zone. Price reacted around this zone here, and price broke it to the downside, and price is trying to go back to this same key level now, serving as resistance. It's no longer support. It was support initially around this zone here, but the moment the price broke it to the downside, the name changed to what? Resistance. So it is now called resistance around this zone again. Now, what we are expecting the market to do is to retest this resistance 1, then we have another resistance around this zone here, and then we have another resistance around this zone here. But the most important one are the two key zones that I just marked out. Now, I'm going to label it POI 1, then label this one as POI 2. One of these resistance zones is going to pay the bills this week on pounds US dollar. So I am expecting this price to retest this zone here and sell, or price to retest this resistance here and sell. And one thing you have to understand as a professional price action trader, don't just wait for price to come to this zone here and make up your mind that market is going to sell 100%. No, market doesn't work that way. That is why you're a price action trader. You have to exercise a lot of patience and allow the market to come to this resistance zone, then pay close attention to the reaction of the candlestick pattern to understand the formation of this price action, what the price action is telling you. You don't trade what you hear in the market, you trade what you see. You don't follow crowd in the market, you trade what you see in the market. You have to follow what the price action is telling you at your point of interest, where you want to sell or where you want to buy. But in this scenario, we are selling. So we want price to retrace or retest this resistance zone serving as POI 1 and give us formation of bearish reversal candlestick pattern. As you all know, that is what we use for our entry system. Our price should retest this key level zone here and form bearish reversal candlestick pattern for us to execute our trade ideas. And if you look at another conditions to back up our sentiment on pounds USD, you will agree with me that this price action is valid, that sellers are the one dominating the market. Now you can see that the former uptrend market has been taken out, right? And now we are having a trend line breakout. And whenever a long-term uptrend line is being invalidated after a very long time, after a long period of time, is an indication that the sellers are going to push the market to the down, right? You can see the price reacted at the uptrend line around this zone, right? Price reacted here, price reacted here. And again, what happened? Price also reacted around this zone here, right? Then all of a sudden, a lot of price action traders are also expecting price to react at the trend line again. That is market for you. I'm very sure a lot of traders will want to take buy opportunity around this zone here, right? But what happened? Price disappointed them, and price, instead of price to buy at this uptrend line, then price invalidated the uptrend line and change it to uptrend line breakout. And whenever you encounter uptrend line breakout in the market after a long period of bullish market, is an indication that the sellers are now back in the game to sell the market, right? So that is another condition to support our trade ideas that this market is going to sell this week. And another powerful currency pair on my watch list this week is also Euro USD. And looking at the price action of Euro USD on the daily time frame, you will agree with me that the price action is also bearish, right? Whereby price formed higher high, higher low, higher high, higher low, higher high, higher low, then higher high, higher low. Now we're expecting market to form a new higher high, but price failed to form higher high. Instead of that, price formed equal high, then took out the recent higher low, which invalidated the bullish structure sentiment during this market. Now we are now having what? Lower low. So what we are expecting is price to form a new lower high, lower low, lower high, lower low, so that we can take this sell opportunity. Now that we have established the market sentiment that the sellers are the one dominating this market, now we just need to establish our key level zone, key levels, right, where we want to take sell opportunity. This key level is going to serve as our point of interest or area of value where we want to take sell opportunity. Now this space was serving as a resistance, it was serving as support before, right? Then price broke it to the downside, right? Then we're expecting the market to retest this resistance so that we can take sell opportunity. And another thing, we have another key level zone around this place here, whereby we are expecting the price to also retest this zone. So it's going to serve as POI 2 for us. This place is going to serve as POI 2, and this zone is going to serve as POI 1 for our sell opportunity, right? So that is what we're expecting on Euro USD. And if you establish uptrend line market, you agree with me that this long-term uptrend line has been invalidated. Now we are not having trend line breakout around this zone here. So we're having trend line breakout. And whenever we have uptrend line breakout to the downside, is another indication to inform us to signify that the sellers are the one dominating this market. All these things are very important, and you must not underrate all these conditions when you are doing your top down market analysis. Now let's get down to the lower time frame, 4 hours time frame. Now on 4 hours time frame, so we are expecting the market to trade this zone here and react. We want the price action to react, to talk to us, because we are patient price action trader. We don't just want to analyze and come to conclusion that market is going to buy to this zone and sell immediately. No, it doesn't work that way. Market can retest here and keep on buying to the upper side. That's why we need to pay close attention the moment price action buy to retest this resistance zone. It is what the price action is telling us that is going to determine whether we are going to sell or not. If the price action around our POI 1 is not interesting, is not okay enough, you understand, or we are not comfortable with what the price action is telling us around this zone, we are not going to enter the trade. So we will expect the market to form what we are expecting, which is our entry system, which is our uh, uh, reversal candlestick patterns, formation of very reversal candlestick patterns around this zone for us to sell the market, or we want the price to buy to this zone so that we can take sell opportunity. These are very important, and I don't want this video to be too long. These are the three powerful currency pairs that I'm watching out this week, and I'm very sure that one or two pairs or one or two setups is going to play out this week. And if you enjoy this top down market analysis, please do me a favor, click on the like and subscribe button, turn on the notification button so that you can be the first to get notification when next we upload another exclusive forex video tutorial. See you next time.